Hey traders, thanks for checking out this video. My name is Travis from Master the Market, and this video is going to be talking about the morning flush trading strategy, which is a day trading strategy that looks for stocks gapping up in pre-market and then taking advantage of them by buying into their morning sell-off, or in other words, their morning flush, before they start to recover and before they break out to new highs during the rest of the day. So let's go ahead and get right into this, and I wanted to first start off with an example of what this morning flush strategy is looking for. This gray section here on the left side of the chart is the pre-market hours, and then once the background goes to black, that's when the market opens for the day. So we can see here in this pre-market section that there is a stock gapping up. It's moving up significantly from its previous day close, most likely because there was some kind of catalyst or press release that was put out by the company. But when it comes to this morning flush trading strategy, what we want to see is that these stocks gapping up have a sell-off at the market open, which is exactly what we see here, as LIFE sells off from about 650 down to the 580 area. Following that sell-off and following that morning flush, we see that it starts to kind of curl back up. The stock begins to recover. It actually ends up breaking out above the opening high as well as the pre-market high, and then it ends up running on throughout the rest of the day. So really the whole idea of this strategy is to look for these stocks gapping up, wait for them to form a bottom when they sell off at the market open, and then look to buy into them to actually capture this portion of the move once they start to break out and once they start to run. Okay, so now I want to talk about how you can actually find stocks that are going to kind of fit into this morning flush trading strategy. And the first step, pretty obviously, is going to be to find stocks that are gapping up in pre-market. Now to do this, you can either use some kind of scanner or some kind of screener, and just look for stocks that are up significantly from their previous day's close, or alternatively, you can use the morning watch list that I post on my Twitter as well as my website every single day. I'm going to have my Twitter link down below in the description, and in just a moment, I'm going to show you exactly what these morning watch lists look like. But the other thing that you want to look for is ideally, the best morning flush setups are going to tend to have very strong volume. So these stocks that are trading 5 million, 10 million, even 20 million or more shares during pre-market alone, those tend to be the stocks that have the best potential to end up becoming all-day runners after they have their morning flush at the open. Okay, now very quickly, just to show you what I mean by the morning watch list, this is something again that I post on my Twitter every single day, as well as update on my website, Master the Market. But if you don't currently use some kind of scanner or some kind of screener, this can be a great tool for you to find these stocks that are gapping up in pre-market to actually look to take advantage of this morning flush strategy. You can see that I have some stocks gapping up as well as stocks gapping down, and I'm going to share the news headlines or the catalyst for the move, as well as some levels of support, some levels of resistance, and the number of shares outstanding for that stock. Okay, but anyway, with that being said, that's going to be the first step, simply to find these stocks that are gapping up in pre-market. The next thing that you want to do is going to be to check for the catalyst. Now, most of the time when it comes to these stocks gapping up, they're going to have some kind of news or some kind of catalyst, and that's going to be the thing that is actually driving the stock to the upside in the first place. But with that being said, not all catalysts are going to be the same. Some of them are going to be much weaker catalysts that simply get an overreaction from the market. And then there's going to be those strong catalysts that are actually very good pieces of news. And of course, those are going to be the pieces of news or the catalysts that we want to look for, because they're going to give the stock greater potential to become an all-day runner. Okay, so with that being said, I wanted to just list a few pretty strong catalysts that I see a lot of times get a strong reaction from the market. And the first of those is going to be any kind of FDA approval. These are mostly going to be, of course, with biotech stocks and biotech companies. If they have some kind of drug or some kind of treatment that they've been testing and doing trials on, and then they get some kind of FDA approval for that drug or for that treatment, that's a pretty strong piece of news, and generally the market is going to have a very strong bullish reaction to that type of news. So these are going to be the catalysts that we like to see when we're looking to buy into a morning flush. Another one is going to be any kind of positive trial results. Positive trial results from some kind of drug or some kind of treatment can really be a great step towards FDA approval in the future. So this is another one that tends to have a really strong bullish reaction from the market, and also something that we want to look for when we're looking for these morning flush setups. And then another example is going to be an earnings beat, and that could be a quarterly or it can be an annual earnings beat. But if a company puts out their earnings and has very strong earnings compared to the expectations or compared to their previous quarter or previous year, that shows that the company is growing and is getting financially and fundamentally stronger, which is always a good sign for a bullish reaction in the market as well. Okay, so now that you've found these stocks that are gapping up and you've narrowed them down to the ones that have the strongest catalysts, the next step is going to be to actually draw lines. And what I mean by this is simply go ahead and look at the charts, do some very basic technical analysis, draw on the charts any lines of support, any lines of resistance, and even any trend lines that you see, because these are often going to be the levels where the morning flush ends before the run to the upside begins. Okay, so very quickly, I just wanted to show how effective it can be to draw these lines on your charts when you find these stocks that are gapping up in the morning. An example today is the stock LPTX. On the left side over here, we have the daily chart, and on the right side over here, we have the 5-minute chart. And what I like to do when I'm drawing lines of support and lines of resistance is first I'm going to look at the shorter term time frames, and I'm going to look at the pre-market price action and see if there's any significant levels of support or any significant levels of resistance that actually formed during that pre-market session. And right off the bat, I'm just going to mark the high up here at about 317 as a level of resistance. I can also see that down here at about 220, the stock kind of consolidates above that price level for a while, and that's also a level of past resistance. So I'm going to go ahead and draw some support at 220. And the next step that I would do is go over to the longer term time frames like the daily and sometimes even the weekly charts and look for any significant levels of support or resistance in that area as well. And we can see that right here at about 280 or 285, there was a level of resistance in the past. And then we can also see up here at about 324 because that was a previous high. That's going to be a level of resistance as well. So now you have these key levels drawn on your chart, and what you would do is simply wait for that morning flush to happen. Ideally, it's going to happen down to a level of support. That level of support is going to continue to hold, and then you can buy in and use that support level as a risk level. So that way, if the stock doesn't end up bouncing back up and recovering, you can cut losses below that support level and never have to worry about taking a large loss on these setups. All right, but anyway, the next step after having these lines on your chart is going to be to buy the reversal in these stocks. So in other words, you want to wait for some kind of sign of a reversal from the morning flush before you actually buy the stock. You may have heard the saying before to not try to catch the falling knife in the stock market, and that simply means that you don't want to buy into a stock that is actively falling to the downside. And that same concept is going to apply to the morning flush strategy as well. Even though we're looking for these stocks that are selling off, we want to wait for them to form a bottom and show us some kind of sign of a reversal before we actually buy into them. So that reversal can be the chart starting to curl to the upside. It can be new levels of support starting to form. We may see that the bids on the level 2 are starting to increase, and so on and so forth. But whatever it may be, looking for a reversal sign is going to be a key part of taking advantage of these morning flush setups. And the nice thing about waiting for these lows to form and waiting for a reversal to actually start to happen before you buy in is now at this point you're already going to have a low that is formed in the stock, and you can use that low now as a risk level to cut losses if the trade happens to go against you. And this example that we see on the screen here is a really good example of that because we see that at the market open there was a big morning flush, which of course is exactly what we're looking for. And once it forms this low down here at about $13.70 and it starts to kind of bounce back up, we now see that that low is going to naturally become a level of support. So if you decide to buy into this morning flush setup in this area, $14.50, even up to $15 per share, you can still use that $13.70 area down here as a risk level to cut losses in case this happens to be kind of just a quick bounce before it continues lower. So of course, that's a much better way to go about trading this strategy rather than kind of blindly buying into the stock as it's flushing and as it's selling off, maybe at $16, at $15.50, even at $15 before it's ever even set in a low and before it ever started to form any levels of support or even show any signs of reversing to the upside. Okay, so anyway, that is the morning flush strategy. That's the basic idea behind this strategy. Find stocks gapping up with a strong piece of news and strong volume. Wait for them to have a sell-off or a flush at the market open, and then look to buy into them after that flush is ending once they start to show signs of a reversal. So that way you can profit from them starting to recover and break out to new highs later in the day. Hopefully you found this strategy helpful and hopefully you enjoyed this video. If you did, please make sure to give it a like and subscribe to the channel so you don't miss out on future videos and future trading lessons. And of course, if you want to learn more about day trading, swing trading, and even long-term investing, as well as access our exclusive market resources and our trading chat room with over 1,000 active traders in it every single day, all of that can be found on my website, Master the Market, which is going to be linked down below in the description. But anyway, thank you again for watching. I hope you enjoyed. And until next video, good luck with your trading.